Good afternoon, everyone. Well, depending on when you watch this. So, hello, everyone, and welcome to another quick take video. Today, we are looking at Medadvisor Limited. So, Medadvisor is a Australian company which creates and develops the Medadvisor platform. So what is used for is medication management and prescription management for the Australian public. The way that it works is that patients sign up with Medadvisor and set a regular pharmacy that they go to, and the patient keep the script at the pharmacy. And whenever they want to, let's say, fill a prescription, they can fill the prescription. They can order prescription through Medadvisor, and the allocated pharmacy, the nominated pharmacy, can then see that order, fill it before the patient gets in. And when the patient comes in, they can just pick up the medication, pay for it, and go. So the platform aims to reduce the wait time at the pharmacy, and also increases the the return of patients to the pharmacy. So the way that Australian pharmacy receive money through prescriptions is if they dispense more prescription, then they get paid more by the government. They get paid in the same amount, depending on what the government amount is, and just the turnover is high, the volume of prescription is higher, so then they get paid more. So that's how Medadvisor work. And because I'm in the pharmacy industry, I kind of have a very intimate understanding of Medadvisor. Even though I didn't explain it very well, I definitely understand how it works and the benefits for patients and benefits for pharmacy. So my friend, he's also a pharmacist, and he brought this one up to me. So let's have a look at it and see what's happening with the company. All right, so go straight to financial, goes straight to ratios. So while that is loading, let's just have a look at the ASX. So at the moment, it's trading for 34 cents. What is it? Listed on 2011 and doesn't really pay any dividend. So from the look of it, it's gonna have negative earnings. Okay, so PE ratio, nothing. No quick ratio, because probably not even have cash on hand to actually cover for the year, and no dividend. Okay, that's fine. Moving on. So really, it's a technology company that provides a medication management platform rather than an actual like health company. Okay, so so hasn't made any money. In fact, it's been losing more and more money. That's not necessarily a bad sign, especially when this is a IT company, because they have to develop the platform, roll it out, but investors gonna expect a lot more from them when they kind of like explode. And from what I can see, they definitely kind of like the only player in the Australian market at the moment. And if they manage to consolidate their stands in the Australian market, then getting the profit, they would have like a good majority of market share unless a competitor rises up. So at the moment, all the pharmacies I've worked for use Medadvisor, and that's a good sign. Obviously, there are one other player that I know, and it belongs to the Chemist Warehouse Group. So it's a very big pharmacy chain in Australia. They focus on low prices. Anyways. So operating not looking good, but we don't. Again, it's a technology company, and they tend to lose money in the first 3 to 5 years. So it's only they listed in 2011. So that's, we can have a look at that in the trading view, and let's have a look later in the trading view. Investing, so they invested in some money. Financing, they raised some more capital. At least they didn't borrow some more debt, so that's okay. So they got a positive change in cash flow, which is from the look of it, it's because of this raising of capitals through issuance of stock. Okay, having a look at the balance sheet. All right, so balance sheet. Okay, so it has more assets. Cash got $12 million. Okay, that's surprising. And let's see, current liabilities. Current liabilities is 3. Okay, and total liabilities 4. Okay, so it definitely has cash to cover at least 3 years. Total asset, current liabilities, 4 years. So I'm not sure what's going on. It's odd. But it seems like we want to know, we already saw where the cash coming from is from raising a capital. Preferably you want the cash to be coming from its consumers. But Australian pharmacy industry especially is really tough at the moment, even for pharmacy owners. Okay, so income statement. And then we move over to the chart. Okay, income statement. Let's go straight to net income. Yeah, it's not making any money. That's why there's no PE ratio really, because net income you divide by the total amount of shares, you'll get the earning per shares, and then price divided by that. But if it's negative net income, then going to have a negative earning per shares, and PE's ratio is going to be negative. So look at the moment, it doesn't really show that it can generate money, even though it's kind of like the only market player. And I think this is more to do with the actual industry and the pharmacy sector itself rather than the company. So we'll see what happens. But at least from looking at this, I wouldn't jump right in just yet, because if it does kind of start to move up, there will be some really good indications and for us to have a look at. All right, so jumping straight into the financial. So I just want to have a look at that of the net income. So it's just been losing more and more money. Again, it's not a bad thing, but it's been 1, 2, 3, 4, 5, 6 years at least where it hasn't made any money at all. And when it's IPO'd, it was $1.57. Now it's 34 cents. So it's definitely the flatness of it definitely keeps it out of the market's light. And it's always that front page test I talk about. You want to find these kind of companies. Well, not these kind of company, but this is an aspect you ideally want to look at and say, hey, maybe this is I can invest early. This is the baseline, right? There's 4 stage of company growth. You got baseline, you got rapid growth, top, and then decline. So this could be the baseline, and it's setting up the baseline. But for the rapid growth to happen, there must be a catalyst, some kind of innovative product, which, it does have a product, but this product is, I think, just too dependent on the way that the pharmacy industry is working. The way the pharmacy industry happens in Australia. So it does have a blockade, a barrier that it has to kind of move beyond. Right. So look, I don't feel confident in investing it at the moment, because like, you know, it's low and it's flat, and you say, right, this is fantastic. One of the good things is that it has a very tight a tight tight prices, but it really doesn't really mean much. It just means like not a lot of people are trading. If one person traded, then it will be like a flat line, which is a doji, right? And that's not necessarily a good thing to have tight prices. You got to have a look at a lot of things, like volume and stuff like that, right? Yeah, I don't know. It's not there for me at all. Even the MACD is not showing anything significant. Maybe let's get rid of the MACD and put up the RSI and see what's happening here. But not looking good. Not something I would throw my money in. And if I do, I would definitely do a very small amount. And I wouldn't be jumping to it. So it's kind of like never oversold. So look, these are only indicators. You don't know what's going to happen. If it posed like, you know, an actual profit, then, you know, that's fantastic. So we want to map out when it's going to do its price, you know, earning guidance and stuff like that. So let's, you know what, let's check on a Fibonacci for the sake of being in depth, for detail's sake. So, oh boy, it's just not a very exciting company, which is, again, I'm being very hypocritical here. Is that you want something like that is not too exciting, so that it stay out the market light, so then you can actually like have time to investigate, look at it, and make those initial early purchases. But if it's going down anyway, it's heading towards this really low the 38% mark, which is quite low. When a company kind of dip that much, like dip beyond the 50% mark, you kind of wonder why. So yeah, I have no plan to purchase this. I will put it on a review list of at least like maybe 2 weeks. So that's the plan anyways. So anyways, not a very exciting episode of Quick Take, but that's part of being an investor. You got to look through or comb through all of these. Even if you use a screener, you got to still comb through the future list. Yes, so I hope that you find something interesting in this particular video. And if you like what I'm doing, please give it a like, thumbs up, share any of the videos I have in the Quick Take playlist, subscribe if you want to keep up to date with all updates and analysis and review. And if you want me to review analyze a particular company, again, leave a comment, and if you have anything to add to the whole discussion, do that in the comment section also. Yeah, so again, these are not meant to be financial advisors, so seek help from your oh boy, I say this every time, I should just play a clip, right? Seek advice from your financial advisor and stuff like that. Other than that, hope you have a great day trading, or wherever you are, and all the best. Take care. Bye.